Welcome to Investor in the Family Radio, a podcast dedicated to helping you make better investments in less time so you can live more life. My name is Brian Bain, and I'm your host. You can find more shows and other valuable content at investorinthefamily.com. Well, hey, Mark, welcome back to the show.
Hi, Brian. Good to be back.
Hey, well, again, thanks for joining us as always. And we had a really fun conversation recently about Apple, and we wanted to follow it up with a conversation about NVIDIA, another stock you followed closely for a number of years, and have released a number of articles recently on Seeking Alpha covering NVIDIA. One of your more recent articles is entitled NVIDIA's Crypto Time Bomb, Perception versus Reality. So you have some big keywords there. You have NVIDIA and crypto all in one headline. Do you mind kind of helping our audience who hasn't read the article yet up to date on kind of what your thesis is and what's going on?
Yeah. NVIDIA recently released their fiscal Q3 results, and their results for the quarter were fine, but their guidance, they actually guided for a 7% year-over-year decline in revenue, and which was a big shock in and of itself because they've been pretty much growing consistently quarter by quarter, and they also stated pretty unequivocally in the conference call that this was due to a channel inventory glut of what they call mid-price cards. It's really kind of the low end of graphics cards, graphics add-in boards for NVIDIA, GTX like 1050, 1060 series. And they said, well, we think that's because of crypto. And that sort of fulfilled a lot of expectations on the part of NVIDIA bears that crypto was going to become a big problem for NVIDIA. And so the stock just sold off massively after the report came out.
And so NVIDIA bears had been predicting that a lot of the run-up in NVIDIA stock was due to the big crypto boom and bust cycle that happened in this last year. And now that that's going away, at least for now, they assume, well, that's going to hit NVIDIA pretty hard, but no one really knew how much of NVIDIA's revenues were coming from crypto, and the fact that now they're guiding down because of that is evidence the bears are right, at least in their mind. Is that the general idea?
Yeah, I actually decided to do some calculations that would try to quantify a little bit how much of NVIDIA's revenue was actually coming from crypto. And
I think we talked about that on one of our shows, actually.
Yeah, because I had done this earlier in the year in February when one of the Seeking Alpha contributors came out with his thesis that crypto was a big time bomb for NVIDIA. And so then when I revisited it, what I discovered was that actually, crypto mining has kind of leveled off. It's still growing slightly, but not nearly at the rate that it was in 2017. So the thesis that NVIDIA's, and this is where the bears were saying the gaming segment growth is all due to crypto. It just couldn't be due to crypto because there's an interesting chart that you can access online from a website called BitInfo Charts that actually shows the aggregate mining capacity for the cryptocurrencies that are mineable with GPUs. Not all of them can be. Like Bitcoin, you haven't been able to mine that with a GPU in a long time. Mm-hmm. So if you look at that chart, the interesting thing about it is that mining capacity kind of leveled off in 2018. So that means people weren't adding a lot of mining capacity. They weren't taking a lot either away. It was just kind of going along steady state, just growing slightly. So that said that there wouldn't be a big demand for mining graphics cards, and therefore it couldn't fuel NVIDIA's growth because NVIDIA's growth was way in excess of what could be explainable in terms of mining demand. And so in that article, I actually show a plot, a chart where I show NVIDIA's gaming revenue and then the amount of revenue they would actually get from crypto mining. and it's just a small fraction of their gaming revenue, gaming segment growth, and so it really, in my mind, it just shot down that whole thesis that this is all due to crypto. Now what's been going on? Well, in terms of the segment inventory the channel inventory management, it is pretty clear that NVIDIA miscalculated, and so did their board partners. And the board partners, of course, are independent companies, the companies like Asus and Gigabyte and a whole host of PC equipment companies that buy chips from NVIDIA, put them into their own graphics cards, and then sell them. So the part of the problem was that the board partners hadn't managed their inventory very well either. So between NVIDIA and the board partners, there was essentially, NVIDIA stated about 12 weeks worth of inventory for these low-end type cards that could go to mining, but could also go to gaming as well.
So why do you think NVIDIA mentioned crypto in the reasoning if it wasn't a factor or a material factor?
Well, I think it was a factor. I think it's hard to tell exactly how much of a factor it was. The takeaway I got from my analysis was that there hadn't been, and this had been kind of assumed, and I had been assuming it up until the time that I revisited the numbers. I had been assuming, other analysts had been assuming that there had been a decline in mining. A decline in mining would push a lot of these graphics cards that had been used for mining out into the used graphics card market. They would appear on eBay and places like that. But in fact, there wasn't a big decline in mining. There was just much less growth. And so I think NVIDIA just miscalculated on the amount of growth that they expected to see.
Gotcha.
They
overproduced, anticipating
so they
greater
overproduced,
demand by crypto.
assuming that the mining demand would still be there, and then when the demand tapered off, they were left with a bunch of cards. And that's about it. Now, it is possible in the future that we could see a big glut of used cards. That can happen if, for instance, mining ASICs become important. But from what I can tell from reading about these currencies, and their Ethereum, Zcash, and Monero, the developers all really want to preserve the ability of miners to use GPUs, and they're all basically saying if an ASIC is developed that is workable for mining their currencies, they'll change the mining algorithms to essentially obsolete the ASICs almost immediately.
Well, and I've heard of that, and I can't remember which currency it was that did that, but I remember specifically reading maybe over the summer about a currency that did just that, or threatened. Maybe it's the same. Maybe it was a threat of it, like you're referring to.
I think that was Monero that did a hard fork and essentially headed off an ASIC. There is an ASIC that for mining Ethereum right now that's put out by a company called Bitmain, which is the big Chinese company that makes ASICs for mining things like Bitcoin. And they actually produced an ASIC earlier this year, but it didn't turn out to be very impactful. It wasn't really greatly superior to GPUs in terms of electrical efficiency, which is the big advantage of going with an ASIC. If an ASIC is possible to be used, they're more electrical.
An ASIC is what would be used for like a Bitcoin, for example, mining.
Right.
And is it essentially just a much more powerful processor, more powerful, more energy efficient?
It's custom made. It's custom designed. Rather than being a general purpose programmable processor, it's custom designed to execute the specific algorithms for a specific cryptocurrency mining process. And And of course, because the algorithms are all basically cast in silicon, it's totally inflexible. So if the algorithms change, then the ASIC becomes worthless.
Oh, fascinating. Huh.
But you see, that was the thing with Bitcoin. The algorithms hadn't changed for so long that it was reasonable, and because of the nature of the algorithms, it was also reasonable to develop an ASIC, and then the ASICs just took over. They took over Bitcoin. They took over Litecoin a few years later. But now the developers for the cryptocurrencies really don't want ASICs, and so they're trying to figure out ways to sort of keep them out of the mining process.
And not to go too off topic from the NVIDIA, but I guess my assumption is that the reason developers of some of those currencies or cryptos don't want ASICs is because they don't want large miners to be able to take over control, essentially. Because I feel like that, my understanding with Bitcoin, for example, you got several really large miners that are just powerful, mining rigs and stuff they create an outsized authority in the Bitcoin world in terms of what does and doesn't happen with the currency. Whereas if they're able to prevent that, then it's just tons of small players and no one large.
Right. Bitmain is one of those that became really big in Bitcoin mining. Okay. Yeah. So that's part of it. So is there a potential danger? Yeah, there is a danger for NVIDIA, but it's not as great as I think the bears would make it out to be. And I think from my standpoint, the more important takeaway is that the gaming segment growth, which was huge this year. I mean, let me just quote a couple of numbers. The segment growth in gaming year over year for Q3, for fiscal Q3 was, okay, it wasn't huge, but it was still pretty good. It was 13% year over year. They've been growing
Q3, which is well after, I'm sure, most of those declines in Bitcoin demand would have happened.
Yeah, see, that was the thing, is that the Bitcoin demand had already dropped off, and yet the gaming revenue stayed very, very high. So I just don't buy the thesis that fed the growth in the gaming segment revenue. Crypto mining really contributed to growth in the segment in fiscal 2019 for NVIDIA. I think NVIDIA's gaming segment growth was simply the result of having a superior product. Mm-hmm. In the high end of the gaming add-in board market, they really don't have any competition from AMD.
Okay, and let me zoom out just a little bit here too regarding NVIDIA, and I'll ask some questions that may be obvious to some of our listeners who follow the company more closely, but I think a lot who don't may find it helpful. Before we talked about Apple, and we kind of defined Apple, generally speaking, is like the iPhone company. Obviously, there's way more to it than that. There's a lot of conversation there, but if you're going to boil down Apple, like what are some of the key drivers of their success? It's hard to avoid iPhone as being one of those key metrics. For NVIDIA, if you're going to boil NVIDIA down to what is the one or two key metrics that are going to be most telling about how well the company's doing and projecting that into the future, first of all, do you think you can do that? And if so, what would you say those are?
Sure. Well, gaming continues to be very important, and I think it's going to stay important primarily because of what NVIDIA did with the new generation of what's called Turing architecture GPUs. They've introduced for not just gaming, but also for professional visualization and as well, sort of a new market for them in digital special effects for cinema and TV. And what these cards are capable of doing is they're capable of doing what's called ray tracing. And ray tracing is a way of doing sort of photorealistic rendering. Up until NVIDIA introduced Turing, ray tracing just took a lot of time. And so,
just like for example, like on a video game, be able to create quality that looks like a photograph.
Yeah, as a matter of yeah, exactly, and or very close. I mean, it's not perfect in the way that it's currently implemented because they had to make some performance compromises. But if you look at any of the digital special effects that are done in the big special effects movies like, Defenders and so forth. The effects are all done by massive server farms that implement these ray tracing algorithms. And what NVIDIA did this year was introduce with Turing a single graphics card that could replace, in effect, a massive ray tracing rendering farm of standard CPUs.
That's remarkable.
And that's, it is remarkable. And no one, and this wasn't on my radar, it wasn't on anyone's radar. No one expected them to be able to do this soon, and especially to be able to incorporate that capability into a fairly affordable consumer graphics card that could be used for video games. And not only did they orchestrate this whole process of inventing new technology in order to make that possible, but then they also worked with game developers so that the game developers would have actual games available that make use of this new technology. AMD just doesn't have anything like that. They've acknowledged they don't have anything like that, and I think they've, Lisa Su in a recent article, indicated that at least she indicated respect for the technology, which I really appreciated.
Yeah,
I thought that
sure.
was commendable honesty, because I wasn't getting that from the AMD fans. They were all sort of acting like it was just sort of a marketing gimmick of,
right.
of NVIDIA.
It's not that cool. Yeah.
Yeah, we don't really need it.
Well,
no, but she did acknowledge that it's for real, and she did in effect commit the company to producing cards that will be capable of it at some point. But I think it's probably a year away or more for them. So I think NVIDIA has really stretched their lead considerably over their competitors, their main GPU competitor, which is AMD, and also by extrapolation, they're what will eventually be competition from Intel. Whenever Intel gets a graphics card out the door, Intel is saying it's now going to be 2020.
Okay. Still behind on the paradigm shift, apparently. So,
very much so. And the key thing from my standpoint is that NVIDIA is just lengthening their lead over their competitors. And this is the thing that the bears are kind of failing to acknowledge.
Okay, so help me here a little bit. So NVIDIA, in 2016, was right around $30, and then as of October of this year was at $289. So obviously incredible
that was their
growth,
high point.
Incredible growth, and now it's down to $158. So it's a huge growth and a huge drop, but still up huge from where it was just 2 years ago, or a year and
Sure.
2.5 years ago.
Yeah, I think the perception was that they had run well ahead of their true valuation. I don't agree with that, but I think the market did believe that.
Yeah, well, that's kind of what I want to help you to help me and our listeners understand is kind of what, in terms of what drove that growth. I know we've talked a lot before about the paradigm shift in terms of chips and how NVIDIA, and I believe specifically in their mobile applications, has been able to just become a dominant player in mobile. And that was a huge driver for that growth, again, from 33 to 290 basically in 2.5 years.
Well, I think actually, and let me correct you a little bit. I think
don't know. Yeah.
Mobile is certainly not in terms of consumer mobile devices. They actually kind of stumbled a little bit on mobile devices. They actually they did try for a while to field a chipset for smartphones. It was not successful. I think the main drivers. You asked me, what are the main drivers? The main drivers are gaming growth. And that's still the biggest part of their revenue. The data center growth in the most recent quarter, it was up 58% year over year. So that's the big growth engine right now for them. And then automotive, I think most people, myself included, are expecting automotive and self-driving cars to be a big future driver of revenue growth. It isn't so big right now. It was up 19% year over year. So data center right now is the big growth engine. They're in the top performing supercomputers in the world. They're the basic math engine that those supercomputers use. And they're also in virtually every cloud service provider on the planet.
And just to be, okay, that's a big deal. And then just to be clear, when you say gaming growth, like if for anyone listening, you're not necessarily talking about like PlayStations and Xboxes. You're talking about like computer gaming with like a CPU, like a CPU and all that kind of stuff, right?
Right, where you have an actual, standalone GPU,
right,
discrete GPU, and an add-in board.
Right.
Well, most of it is PC gaming, but actually gaming got a boost this year from Nintendo Switch as well, because NVIDIA provides the processor for the Nintendo Switch. And Nintendo Switch was pretty successful, so they got a boost from that as well. And that actually does get booked in gaming.
And so that drive in stock growth in the last 2.5 years was what changed about gaming and data center. I mean, was it just? I mean, because they were pretty flat for a while before that. Did they come out with some new chip? Like, what happened that made them so dominant so quick and become such? Right. Was it industry? Was it market share growth? Like the side of the market just grew and they grew into it, or did they come out with something really unique that threw them ahead of everyone else, or maybe both?
Well, I think they in 2000 calendar 2016, fiscal 2017, NVIDIA came out with the Pascal, what they call the Pascal architecture, GPU architecture, and if you look at gaming revenue, they went from about let's see, in their fiscal 2017 Q2, they were right around 800 million in revenue. And then by 2019 Q3, they had more or less doubled that.
Wow.
So that was a big era of growth. And it was mostly Pascal.
Wow.
In fact, because they're still actually, until Turing came out, which was just this last September, they had been going along on Pascal for a couple of years, and it was still the highest performing GPU available for gaming, that anyone could buy, depending on which version you bought. If you had to buy the top end. Now, I hear a lot of complaints about the NVIDIA overcharging for their GPUs, but this is just supply and demand. They just charge what the market will bear.
Right. And so really, I guess it's a couple of factors. First of all, they've come out with significant upgrades in terms of their chips, but they're also in rapidly growing markets. I mean, gaming has been a rapidly growing market, to my understanding. Obviously, cloud computing has been, and data centers have been huge growth there. So really, they've just been primed and they've been able to position themselves as leaders in massively growing industries or sectors, and that's really been the big driver so far.
Yeah, absolutely.
And so,
let me quote you on one other useful statistic.
Sure.
In that same period of time that gaming revenue doubled, the data center revenue quadrupled.
Oh wow.
So yeah, I mean, data center really has grown an awful lot. So is automotive. Automotive is growing, not nearly as fast, but it's growing.
And I would assume that with the onset, again, when and how this happens, I'm not sure, but as augmented and virtual reality becomes more of a factor, I would assume NVIDIA is probably going to be positioning themselves pretty well there, is also to be determined. But I can see that being if that ends up being as big of a deal as other people think of it potentially being, I can see that being a huge driver for NVIDIA as well.
Yeah. Well, the graphics card companies in general have been really cheerleaders for augmented and virtual reality, because those types of experiences really put the burden on the GPU and really require a lot of processing horsepower. So they're more than happy to sell chips for that task.
So do you feel like, as far as going forward, NVIDIA at its current price, do you think, it sounds like you think the market is being way too pessimistic in terms of the sell-off.
Oh, yeah.
So, I mean, do you see the growth we saw from 16 to mid 18? Do you see more of that in the future?
Well, sure. I actually think, from doing the current discounted cash flow model is modeling a fair value of about $300 per share. So yeah, I think they still have lots of growth available. I think it's gonna come from data centers, it's gonna come from automotive. I did not model particularly a lot of gaming growth, but I still assume that there is going to be some. I think it'll taper off. But once they came out with Turing, I decided to actually up my estimates for growth in the gaming segment, because I felt that they were going to increase market share and also essentially their ASPs for the cards.
So you're saying present value around $300, and right now it's trading about $157.
Yeah,
and so that's pretty compelling. And obviously, as those markets continue to grow going forward, then that creates a much more compelling stock price. Yeah, I mean, a lot of room for growth.
It's going to take them a while to grow into that valuation, to get to the point where investors feel that it's justified. I mean, obviously, when you construct these DCF models, you're trying to look out 5-10 years into the future and project what the revenue growth will be, and there's obviously going to be room for debate about that.
Of course, and sentiment, tends to swing from one extreme to the other. It probably was a little overly optimistic a few months ago, and probably way too pessimistic today as well, with lots of other factors coming into it also.
Well, yeah, I mainly just look at it as a buying opportunity, and as I said, I when the sell-off started, I started buying.
Excellent. Hey, Mark, excellent as always. Thanks so much for giving us some of your time today.
Okay, no problem.
The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.